All right. Welcome to Coffee with Marcus or Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in these crazy markets and how we're trading them. Today is Thursday, August 29th. Nvidia can't catch a break. We'll take a look at the earnings reaction there. The Dow tries for a new record high. Salesforce on the move after earnings, and GDP gets revised higher. Plus, we'll take a look at our open positions. As you can see, there's a lot to talk about, so let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and let's go ahead and get to the charts here. Let's pull up the S&P 500, and here we see it. S&P 500 right now higher for the trading session, up 0.7%. We can take a look at a 5-minute chart and just see exactly how this thing's moving. We gapped up a little bit, pulled back. It looked like maybe we were going to get a possible gap fill here, just a small gap, but a nice start to the trading session. And after a bit of a choppy first hour or so, a nice little rally to send us to session highs. So 0.7, 0.75, up about 0.75% right now, making up for yesterday's drop. We were down 0.6%, but we've come off of those lows, and now looks like we're well at these levels. We'd be looking at maybe the best close since Friday. And how far are we away from records? I mean, just less than a percent. So S&P plugging along, looking pretty good. The Dow also higher. The Dow, if we were to close right now, would be closing at a new record close, making a new record intraday high on Monday, then a new record close on Tuesday. The Dow having a decent day, up 0.6%. The NASDAQ up over a percent, but really kind of fallen back in August a little bit more than the other indices. Tech getting hit a little bit harder, although today NASDAQ leading the way, up 1.2%. And part of this is due to Nvidia. We talked about it all week long. Two things that traders are focusing on this week: Nvidia and core PCE. And let's see what Nvidia did after the bell yesterday. Nvidia reported earnings, and let's go ahead and look at a 5-minute chart here, because Nvidia getting hit after hours. So this is where we ended up yesterday. Nvidia down just a little bit, and then this is the initial reaction to earnings, where there was a little bit of a pop and then a big drop here. And in after hours trading, Nvidia down, I think almost 8% at one point. Investors not liking what they heard. We'll take a look at what Nvidia earnings actually showed, but coming back a little bit in pre-market activity. This orangish, yellowish shading here shows us where we were trading going into the U.S. Open, and that's where we opened up. So definitely coming off of the lows that were experienced in after hours trading yesterday with the initial reaction to that earnings report, but down for the day, now down almost 3%. Here, let's sync this up. There we go. So flirting with the 50-day, I believe that is. Let's just see here. I want to be certain. I'm pretty sure that's the 50-day. Yeah, the 50-day moving average. That would make the most sense, but I wanted to be absolutely certain there. Flirting with its 50-day moving average, trading just above 122 a share, down 2.8% right now, in spite of fantastic earnings. So Nvidia just can't catch a break because are investors asking for too much? Let's take a look here. They had a nice earnings beat. They did better than expected on revenue. They had 122% year-over-year revenue increase to over $30 billion for the July quarter. It was the fourth consecutive quarter of triple-digit growth, but didn't impress traders. And this is where it is true that the increases, even though their guidance was also raised, but the beat and the guidance being raised, it was smaller than what has been experienced recently. And I think that and maybe a little profit taking were on the table, and or the issues here and why we're slightly lower, because earnings were solid. Earnings were solid, and we did see a bit of a rally, getting close to where we ended up yesterday. But right now, down for the session, down 3%. Not quite as bad as it was overnight or after hours yesterday, but trader is not super excited about Nvidia. And again, part of this could be some profit taking where investors had held on to this position and they were hoping for better uh, reaction to earnings. And then when it didn't come, they decided to sell some shares, take some profits, maybe move into some other names. We'll take a look at the heat map in a minute. But then also, Nvidia just has done so well and has been so impressive. At some point, it's gonna slow down. They're not going to hit home runs every single quarter, or even if they hit a home run, it could be investors want a grand slam, right? So let's go ahead and let's just take a look at the heat map here. And oops, there we go. So if we look at the heat map, S&P 500 predominantly green, with Nvidia standing out like a sore thumb, down 2.8%. But look at the other big names here. The Magnificent Seven: Microsoft up 2.2%, Apple up 2.6%, Google up 1.5%, Meta up 1.25%, Amazon up 1.5%, Tesla up 2%. So could it be that there is a little bit of profit taking here and redistribution into some of these other names? Possibly. Possibly. Overall, looking pretty green though, and that would explain the move higher and why the S&P's up 0.75% for the trading day, even though Nvidia is trading lower. Now, a few other companies, well, actually, one big one, Salesforce. I mean, Salesforce kind of taking a back seat to Nvidia. Nobody caring too much. Okay, that's an overstatement there. Understatement, understatement. But I mean, honestly, the big company, right? Big company and big earnings here. They beat on earnings, they beat on revenue. They also raised guidance. They were up nicely at the open. Right now, just flat for the session. So giving up all of those gains, but Salesforce did have a nice quarter. And this comes after last quarter's disappointment and that revenue miss. So Salesforce has made their way back, fill in the gap with the move today from that drop that we saw last quarter. Impressive earnings overall for Salesforce, but a little bit in the shadows of Nvidia. Let's take a look at the economic calendar here, because we do have an important item on the calendar tomorrow, but we could also take a look at what came out today. And preliminary GDP actually coming out better than expected. So the GDP increased to 3% versus the 2.8 previous reading. Now, GDP comes in three readings. I think it's initial, preliminary, and then final. And so this is the second one. So it was revised higher. That would be a good thing, because, of course, back in early August, the concerns about jobs and a weakening economy, the R word, recession, started to creep up again, and that snowballed into that bigger event that we saw. Also combined with the carry trade and just everything kind of happening all at once with that jobs report. But better than expected GDP number is good. Jobs have been in the spotlight for a long time, but definitely since the report that we had at the beginning of the month. And jobs coming in line with expectations, a little bit better than expected, because the previous reading, 233,000 Americans filing for first-time unemployment. The expectation was 232,000, and the actual this morning was actually 231. So slightly better. I'd call it in line with expectations. But some decent numbers here when we look at this morning's reports. Tomorrow, it's going to be a biggie. And I mean, I want to say biggie, but more of a wild card because I don't think we're going to get any huge reaction if it comes out as expected. I know that the two key items this week, Nvidia and then core PCE, but a big increase or decrease, I really think that could move the market. Just getting this out of the way, I don't think that moves the needle too much, especially going into a 3-day holiday weekend, because we do have Labor Day on Monday. So tomorrow will be the last trading day of August, and markets are closed on Monday. So, yes, we could see some movement following the core PCE number, but I think we need to see an unexpected number to really move the needle. Otherwise, it could be a little quiet going into a 3-day holiday weekend, and then we pick things up next week after the holiday, and we have another jobs report on next Friday. So next week could definitely be interesting. And of course, the week's not over yet. We'll see what tomorrow brings. Now, while we're here in PowerX Optimizer, we can pull up the WTF Analyzer, and right now, no new signals without a whole lot of movement, and the movement upside being mostly sideways or positive. No surprise that we're not getting any new signals in the S&P 100 and NASDAQ 100, which are the two indices that we like to trade with this strategy. So sitting, waiting for new opportunities, but nothing right now. Looking at open wheel trades, 34.50 is where I was assigned BP. I've been able to sell calls multiple times, got some nice premium on the put side. Right now, I have calls expiring tomorrow at 34.50. For me, there's nothing to do with those calls right now, but I will keep an eye on it, and we'll see. Will I get called away? Will they expire worthless? Will I be able to roll? That's something that I'm going to keep an eye on and take a look at tomorrow. Right now, nothing for me to do, although this is working out nicely. CSIQ, rough day yesterday. Today, pretty quiet compared to what we saw yesterday. I had a viewer comment on this one saying, hey, isn't this move lower with yields down? I mean, is it this? Or is this a problem? I paraphrased that horribly, by the way. And honestly, this is not what I wanted to see. I liked the initial follow through after this, or not follow through, but bounce higher after the move lower on earnings. But since those two positive days, we've pulled back towards these lows here. It does look like we might have a little support around these levels. Honestly, at this point, it seems like the rate cutting, which is what we would like to see with CSIQ, that is going to be uh, important, but now we're looking beyond just the cut, right? If a quarter point is priced in, everybody at this point is expecting that the Fed's going to cut in September. So now that that is the expectation and the probabilities of a cut are at 100%, we'll see if that actually happens. I do believe that the Fed's cutting in September. And then it comes down to how much and how fast, right? September, will it be a quarter point? Will it be a half of a point? I still believe a quarter, but maybe half points on the table. That could be a positive. But then the discussion of when those future cuts will take place is important. What does the Fed expect? Are we going to be seeing a 1-point cut, 1.5-point cut relatively soon, or are there still some concerns? But then also, are these cuts because of a weakening economy and weak job market, or is it because inflation is under control and the economy is still resilient and jobs are still decent? The GDP number today shows that things are looking pretty good. Unemployment claims show that there really aren't any spikes or major short-term concerns, and we just have to see. Another event, which could be interesting, is the election, right? And this is where I do think some of that negativity has been priced into CSIQ right now. If Trump does get elected, and there are tariffs that are implemented, or the focus on green energy is non-existent. I think a lot of that has been priced in, but we also know CSIQ does most of their business outside of the US, and they also are building a plant in Texas. So there are some things that uh, could be okay, regardless of which party takes control of the White House in uh, after the election, right? But nonetheless, I mean, CSIQ has been a tough one, and I'm looking for some traction here and some momentum to the upside. I do think that when it comes, it's going to be fast and furious, but it doesn't mean that we're out of the woods yet. There could definitely be some more downside here, and I would love to see a positive reaction after those cuts first begin in September. But until then, it could be a bit of a wild ride. Halliburton, nothing to do for me to do, nothing for me to do here. But Halliburton does go ex dividend next week, so get a nice little dividend. Looking for this one to pop back up into this range that we had previously. Collected some nice premium on this one and waiting for the next opportunity. Coles, Marcus has Coles, I do not. And a nice reaction initially to earnings yesterday, although it reversed. And right now, just kind of trading right where it was before earnings. So the move higher yesterday was nice. And it does look like Marcus will own this for another week. And Coles sitting at 1968. Merck, some nice movement to the upside. So anybody that has been assigned Merck, some nice opportunities to sell calls. I know that in our mastermind group, we had quite a few traders get assigned between 118 and 120. Right now, sitting at 117.70. So some decent premium to consider there on the call side if you were assigned. Even better if you got assigned at a lower price. UPS moving higher today slightly, and UPS, there's that arrow, there's the direction. Nothing for me to do with this one right now. So these are some open wheel trades looking for WTF, so they should pop up tomorrow, hour before the opening bell. We have a key report. We'll see the reaction there and see how the markets decide to move after that report, but also as we approach the weekend, and if traders want to be bullish or potentially bearish heading into that 3-day, we'll just have to wait and see. With that said, we still have one more trading day left this week. We'll look forward to some more opportunities. But before I leave you, here's something you should always consider. Never trust an acupuncturist. They'll stab you in the back. All right. I had to do a joke, of course. With that said, have a great rest of your trading day. We'll see you back here tomorrow. And until then, happy trading, everybody.